Hello, welcome to Strictly Money, where all voices matter. I'm your host, Saijal Patel. Consumer spending is showing signs of cracks, and debt levels continue to rise as the impact of inflation and high interest rates take hold. Equifax Canada's latest market pulse shows that credit card balances reached an all time high of $107 billion. As debt levels climb, so does the level of financial stress. Rebecca Oakes is AVP of Data and Analytics at Equifax Canada, and she joins me now to discuss the report. Hi, Rebecca. Great to have you back.
Thank you for having me.
So it seems like consumers are just not catching a break. From the last Market Pulse report, and I know I had you on to discuss that. How has the economic background, like interest rates and inflation, impacted debt now?
I mean, we are starting to see that impact of interest rates really coming through. So, as you mentioned at the beginning, we are seeing credit card balances, in particular, reach all-time levels, that $107 billion. We're also seeing, though, that missed payments are also increasing across many products. So, inflation levels, the cost of living, although they've come down a little bit, they're still quite high. And that is starting to have an impact on consumers and kind of their ability to kind of keep making payments and things on their credit commitments.
Yeah, let's talk a little bit about that credit card debt, because the fact that it's reached a new time high, to me, it just tells me that they're relying on credit cards more. And when you're paying something like 20% interest rate, and I always try to stress the fact that it's after tax, right? This is really concerning, isn't it?
Yeah, it definitely is. And I mean, those balances, there are really three things that are going on. So you mentioned the spending. Spending is still high, but we are seeing that growth in spending start to reduce a little bit, particularly for older consumers, younger consumers, millennials. They are still spending at fairly high levels. So that's impacting the balance. We're also seeing people pay a bit less. We're seeing those paying in full start to drop. And as you mentioned, though, those interest rates, they do impact. They impact the minimum payments, they impact the balances. So it's kind of a combination of things that's really impacting those levels.
And can you? I know you just touched on this. So, are you seeing more delinquencies?
Unfortunately, yes. And we
Okay.
are seeing it across all types of credit products. On credit cards, I think it's up around 20% year on year. The good news on credit cards, we are still a little bit below where we were before the pandemic, but there are other types of products where those levels are now higher than we saw back in 2019 and 2020. So definitely some areas of concern coming through.
Rebecca, do you have any sense of whether Canadians are applying for new credit cards and racking up balances that way? Because what I find is, people say, okay, I've maxed out this credit card, so let me go and apply for another credit card and max that out. Are you seeing that? And how does it work? Like, do credit cards notice, hey, we're doing this, and they kibosh the whole thing?
I mean, during that process of someone applying for credit, obviously lenders will look at things like the credit file. They'll be looking at
Mhm.
what balances exist. So that is definitely taken into consideration when they're doing the decisioning. But to answer your question, yeah, absolutely. We are seeing quite large volumes of new credit cards coming through. Around a third of those are new to credit. So that could be from younger consumers or it could be for, immigrants, people entering the country. So there is a lot of that growth is still coming from that type of population, but then two-thirds are still existing people here in Canada who are just using credit more and more and applying for new credit cards. So absolutely, they may be doing what you suggest, which is perhaps maxing out one card and then looking for a new one.
You touched on immigrants. How is the new immigrant credit profile uh, compared to people who've been living here for a long time?
I mean, definitely when you're new to Canada, and I myself was one a few years ago, the first thing you tend to do is you will get a mobile phone. You will potentially get a credit card if you can. It's not always the easiest to do because obviously when you land here, you don't necessarily have a credit file.
Hmm.
But they do tend to start using credit in a similar way to everyone else in the first couple of years. Around $10,000 is the average that we typically would see for a new immigrant in terms of credit usage. But they absolutely are getting those credit cards as well. So it's definitely going to be impacting those levels.
Are they missing payments as well? Like, are you seeing the same type of spending pattern or reliance with new immigrants versus people who had a credit history for a while?
Great question. Interestingly, not so much. So
Oh,
they do miss payments, but normally we actually see a slightly better quality in terms of some of the new immigrants that come in, and maybe that's because they are coming with some finances that they're bringing into the country, or
yeah.
perhaps they haven't yet got established enough to miss those payments. So they do tend to be a little bit lower risk. But yeah, I mean, there definitely are some missed payments that come through.
Welcome back. I'm here with Rebecca Oakes of Equifax Canada. Rebecca, I've been getting a lot of questions from viewers and also clients about whether they should consolidate their debt. And I guess the thinking behind that is if I consolidate, I get a little bit of an interest rate break. It might help a little bit. Do you have any insight into whether this is happening, and also maybe if you have any advice whether they should do it and some of the considerations?
Yeah, I mean, debt consolidation does happen, on a regular basis. It's happened, for many, many years. And typically, when you do see a period of increasing financial stress, it certainly is one tool which individuals do leverage to try and help their financial position. Obviously, there are some good points in terms of debt consolidation. You may be able to reduce your monthly payment. It may make it more affordable in the short term, but normally there is some kind of flip side to that as well. So sometimes when you debt consolidate, you might be stretching your repayments over a longer period, for example. So you actually end up paying more interest over time. So it's really about looking at your current situation, looking at the options that are out there, and working out, is a kind of the benefits outweighing kind of some of the negative side to it as well, and just seeing, is that the best option for you right now?
Yeah, when I get asked too, I said, like, if you're serious about paying off your credit card, maybe that's a good option. But if you're looking at just kicking the can down the road, it might not help. Do you have a sense of whether Canadians are accessing their credit reports because of today's economic environment, or do you get a sense that a lot of people are avoiding looking at it?
I mean, I think typically we do see many consumers accessing their reports, and if you go on our website, it's free to access it. And we do absolutely recommend doing it. It
Yeah,
enables you
yeah.
to see your current situation, check things that look correct and accurate. So yeah, I think consumers generally do that on a fairly regular basis. Right now, if you're trying to go out and get the best deal possible, understanding kind of your credit score and seeing where you rank order and things like that can help in terms of looking at, can I do something to help my score increase and maybe get access to better rates. That can maybe help consumers at the moment as well.
How have people adjusted their spending habits?
Yeah, great question. I mean, we certainly see, for some of the big ticket items, some changes in terms of the type of products they are selecting. So, for example, auto loans right now, we know,
Mm,
in particular, vehicle prices have been very high over the recent years for supply chain, numerous reasons. And actually, now interest rates are high, it can be quite costly to take out an auto loan. So we are seeing things like consumers maybe leverage a home equity line of credit instead of an auto loan, to
mm.
try and finance the purchase of a new vehicle. So there are some changes. We are seeing more shopping around behavior as well. So again, consumers, looking to try and get the best deal, to try and keep those payments low. So there is some good behavior happening, I think, in terms of consumers trying to help themselves in this challenging period.
And speaking of auto loans, are you seeing missed payments there or
Yeah.
delinquencies?
Yeah, we
So right
unfortunately we
across the board.
definitely are, and in
Mm.
particular, it's younger consumers and millennials where those are coming through. So when we look at some of the older consumers, actually they're weathering quite well, currently. But yeah, particularly those younger consumers, those missed payments are definitely up on the auto loan side.
So, Rebecca, I'd be remiss not to talk about mortgages, obviously, because it makes up the biggest portion of overall debt. How has rising rates now impacted homeowners?
I mean, I'm sure we've all seen the reports, so we know that it has impacted house prices. Unfortunately, though, affordability probably isn't really improving that much because those interest rates are so much higher. So the prices have come down a little bit, but it's not really easier to necessarily purchase a home for kind of a lower monthly payment amount. I mean, one thing that we are really starting to see now, though, is some of the impact of renewals coming through.
Hmm.
As consumers are having to kind of refinance, renew their mortgage, some of those payments are increasing quite significantly. And the stress testing that's in place creates a little bit of buffer, but we are seeing that's putting more stress, and certain pockets of homeowners are now seeing missed payments on the mortgage rising, and we're seeing missed payments on other products they have as well. So definitely some impact happening there.
Rebecca, we only have 25 seconds to the end of this interview. Any advice that you can give to people on how to get a handle on their debt?
Yeah, it's always about budgeting for me, looking at
Yeah.
your situation and trying to look at how do you get that debt paid off, particularly if things like interest rates go up again.
Yeah. Always appreciate you coming on. Thanks so much.
Thank you.
Rebecca Oakes of Equifax Canada. Stay with us because when we come back, we're going to be discussing housing shortages. How bad is it and how do we fix it? We'll be right back.